over the past few months, XRP has been sitting in a price zone that has sparked intense discussion across the crypto community. Many investors, analysts, and long-term holders are asking the same question right now. Has XRP already found its bottom, or is the market still in a broader consolidation phase before the next major move? This conversation has grown louder not because of hype, but because of observable market behavior, historical price structures, and changes in sentiment that are worth examining carefully. It's important to start by saying that this discussion is not about predicting prices with certainty. Cryptocurrency markets are volatile, unpredictable, and influenced by a wide range of factors including global economics, regulation, adoption trends, and investor psychology. What we are looking at here is speculation based on data, trends, and past cycles, not financial advice or guarantees. XRP has always been a unique asset within the crypto space. Unlike many tokens that rely solely on speculation or decentralized applications, XRP is closely associated with real-world payment infrastructure and cross-border settlement use cases. Because of this, its price action often behaves differently from meme coins or purely speculative assets. At times it moves slower than the broader market, and at other times it reacts sharply to news related to regulation or institutional interest. Recently, XRP has shown signs of price stabilization after a prolonged period of downward pressure and sideways movement. Historically, markets tend to form bottoms not during moments of excitement, but during periods of boredom, frustration, and low volatility. When volume declines, price ranges tighten, and sentiment becomes neutral or pessimistic. These conditions can sometimes align with long-term accumulation zones. Looking back at previous market cycles, XRP has often spent extended periods consolidating before major moves. In past cycles, these phases were marked by repeated tests of support levels, reduced selling pressure, and a gradual shift in market structure. While history does not repeat exactly, it often rhymes, and many market participants are comparing the current price behavior to those earlier consolidation periods. One factor frequently discussed is on-chain data. While XRP's on-chain metrics differ from proof-of-work or proof-of-stake networks, certain indicators such as wallet distribution, transaction consistency, and network activity can still provide useful context. Some analysts have observed that long-term holders appear to be maintaining positions rather than exiting aggressively, which can sometimes suggest confidence at current price levels. Another point often raised is the broader macroeconomic environment. Interest rates, inflation expectations, and global liquidity conditions all influence risk assets, including cryptocurrencies. When markets face uncertainty, speculative capital tends to retreat. When conditions stabilize, that capital often looks for assets that are perceived as undervalued or fundamentally strong. XRP frequently enters this conversation due to its long-standing presence in the market and its established infrastructure. Regulatory clarity is also a major factor that continues to shape XRP sentiment. Over time, clearer frameworks tend to reduce uncertainty, even if they don't immediately result in price spikes. Markets generally prefer known rules over unknown risks. As clarity improves, long-term participants may feel more comfortable holding or gradually accumulating rather than reacting emotionally to short-term price movements. Market psychology plays a critical role here. When an asset has been trending downward or sideways for an extended period, many investors lose interest. Social media activity slows, headlines become less dramatic, and trading volume drops. Ironically, this is often the environment where long-term positioning quietly takes place. Fear and excitement tend to dominate tops, while apathy and doubt tend to dominate bottoms. It's also worth noting that XRP's correlation with Bitcoin and the broader crypto market is not constant. There have been periods where XRP lagged behind Bitcoin rallies, only to move later in a more aggressive fashion. This delayed reaction is one reason some investors watch XRP closely during market transitions rather than during peak hype cycles. From a technical perspective, many traders analyze support zones where price has historically found buyers. These areas don't guarantee a bottom, but they do represent zones where demand has previously outweighed supply. Repeated defense of these levels over time can indicate that selling pressure is weakening. However, technical analysis should always be viewed as probabilistic, not predictive. Volume behavior is another piece of the puzzle. Sustained sell-offs typically come with high volume, while consolidation phases often show declining volume. When volume dries up, it can suggest that sellers are exhausted, though confirmation usually comes later through higher highs or trend reversals. At the moment, XRP's volume profile reflects caution rather than panic. Long-term narratives also influence perception. XRP's use case in cross-border payments continues to be discussed in financial and fintech circles. Adoption does not always translate immediately into price movement, but over long time frames, utility and integration can influence valuation. Markets often price expectations well before outcomes are fully realized. Another important element is time. Bottoms are rarely single events. They are processes that unfold over weeks or months. During this time, price may move sideways, briefly dip lower, or test support multiple times. This can be emotionally challenging for participants, which is why disciplined risk management and patience are often emphasized by experienced investors. It's also essential to acknowledge opposing viewpoints. Some analysts argue that broader market conditions could still apply pressure to risk assets, including XRP. Others believe that new macroeconomic shocks or changes in sentiment could lead to further downside. These perspectives are valid and highlight why speculation should always be approached cautiously. What makes the current moment interesting is not certainty, but convergence. Price stability, reduced volatility, consistent support levels, and muted sentiment are aligning in a way that historically has preceded major transitions in various markets. Whether this marks a definitive bottom or simply a pause remains to be seen. For viewers watching this space, the key takeaway is not to focus on short-term price predictions, but to understand the broader context. Markets reward patience, discipline, and informed decision-making far more consistently than emotional reactions. Education is the strongest tool any participant can have. As always, it's important to conduct independent research, understand personal risk tolerance, and avoid making decisions based solely on speculation or online commentary. Cryptocurrency remains a high-risk asset class, and no single indicator or narrative can provide certainty. XRP's journey has always been shaped by a mix of technology, regulation, market cycles, and investor psychology. Whether the current price zone represents a long-term bottom or another phase in a larger structure, it is undeniably a moment worth watching closely. The coming months will likely provide more clarity as volume, trend direction, and broader market conditions evolve. Until then, the discussion around XRP bottom speculation will continue, not as a promise, but as an ongoing analysis of a complex and evolving market. As the market continues to evolve, one thing becomes increasingly clear. Major price movements rarely happen when the majority expects them. Instead, they often occur when confidence is low, attention is elsewhere, and narratives feel quiet. XRP's current positioning fits into that broader pattern that experienced market participants tend to watch very closely. Another aspect worth considering is how long XRP has existed compared to many newer digital assets. Longevity in the crypto space carries its own weight. Assets that survive multiple market cycles, regulatory challenges, and shifts in technology often develop a different type of investor base. This base is typically less reactive to short-term price fluctuations and more focused on long-term potential. That dynamic can influence how supply and demand behave during extended consolidation periods. Institutional behavior is also frequently discussed in relation to XRP. Large entities rarely chase price after sharp rallies. Instead, they tend to observe, wait, and act during periods of relative stability.